Question. What is more embarrassing than being a credit ratings agency who for the last 3 years have ignored reality while continuing to rate legacy automotive manufacturers who will be bankrupt before the end of the decade as investment grade while simultaneously rating Tesla as junk despite them being financially bulletproof, an incredible position, money printing, technological advantage, production advantage, scale advantage, I keep going on. The answer, well, let me just check my notes. Is this right? Oh, it is. Apparently nothing. There's literally nothing more embarrassing than being Moody's right now. I'll try to be gentle, but this is still probably going to hurt. Where have I said that before? Oh, and speaking of being a little bit late for the penny to drop, Morgan Stanley have finally figured out that Tesla's going to continue to drive their prices considerably lower, yet, as far as I'm aware, still haven't made any updates to their volume forecast for Tesla deliveries at the end of this decade. So I guess in this video, we'll be learning things that, well, we've known for years. But now that the experts have finally figured it out, they're here to tell us what's going to happen. The same stuff that we've been saying for years. Yay! Why Tesla's price cuts are rational. Price target $220 per share, stock rating overweight. We believe EV price cuts are not a fad, but a trend. I think the penny's dropped. While subject to volatility, investors should anticipate further price cuts in EVs, with cost leader Tesla setting the tone. So far so good, they're on point. I mean, Tesla's going to drive the pricing for the entire industry. They already are. The problem is everyone trying to match Tesla on price is losing catastrophic amounts of money because they're so far behind in terms of their own costs. Probably doesn't end well for most of these companies trying to compete with Tesla on price, but we'll save that for another video. Why do we see Tesla's price cuts as rational competitive behavior? Costs. Tesla has scale and cost leadership in the global EV market. Further innovations in manufacturing are continuously driving deflation in EVs, not unlike examples of polysilicon and LEDs. Exactly. EVs are a new technology ramping up. There's a huge amount of innovation to occur in manufacturing. Shout out to, let's see here, Tesla's gigacasting, octavalve heat pump, and their newly designed modular manufacturing system, which will approximately halve the cost of their vehicles when including all of the other savings with their next-gen platform. This is a fundamentally important thing that even Morgan Stanley, did I say that? That's very rude, I would never say that, don't seem to fully grasp. These clowns still think Tesla's looking at like 6-ish million electric vehicles produced in 2030. I'm looking forward to their updated volume estimates because they're right. The costs are going to continue to decline. In fact, one might even say the costs will continue to decline precipitously over time. A compelling EV that is superior on every single metric will be available in a few years' time for less than an ICE vehicle is today. Standards. Tesla wants to establish industry standards for industrialization of EV manufacturing and infrastructure at higher scale. Also true. Competition. What competition? If Tesla doesn't cut price, someone else will. No. Sorry, Morgan Stanley, but no. I mean, in theory, yes, they might cut prices, but if they're already losing money and then they cut prices and lose more money, that is not a viable long-term strategy. It leads to bankruptcy. Tesla is really dictating terms around pricing. VW just unveiled a concept ID2 with a targeted €20,000 price point to be produced in a few years. Oh, where do we fucking begin? 1, they're going to lose money on these things. 2, it's a fucking concept car, bro. And why did this computer rendering suddenly appear a few weeks after Tesla's Investor Day 2023? It's because VW shit the fucking bed and went, wait, what? They can make them for half price? We're fucked. What can we do? How can we stop people waiting for this vehicle from Tesla? I know. Let's make some pretty pictures for dumbasses who think a pretty picture equals a real product and announce the proposed pricing, which we'll never actually be able to meet. And hopefully a few people go, you know what, I'm going to wait for that VW. It looks kind of decent. It's going to be affordable. It's not really viable for companies to announce low price entry-level electric vehicles before they've driven their cost of producing electric vehicles down to a point where they're in a cost leadership position. Tesla's there. No one else is. VW's concept car and supposed potential hypothetical pricing is a fantasy, reminiscent of other rational pricing actions by players in other emerging industries, i.e. Amazon Prime and Netflix, to amplify early commercial and network effects at scale. Affordability. There's a gap in the market for $25,000 vehicles with a sub $400 monthly payment. Discussions with auto dealers suggest a sticker shock for new prices. As many legacy OEMs have abandoned entry-level ICE offerings, it's up to cheaper EVs to fill the gap. Now, this may be true, but again, we need to talk about this a little bit. It's all well and good to say that legacy automotive manufacturers have almost universally abandoned making cheap, affordable entry-level cars, at least ICE vehicles. But in order to fill the gap with electric vehicles, you need to be able to make them in that price point and do so profitably. And unless we're talking about Tesla or a company in China, No one's doing this. You can't fill the gap of these vehicles with vehicles that you're producing and losing thousands of dollars on because you end up going bankrupt. You sell more vehicles for more losses, you lose more money, you go bankrupt. So while Morgan Stanley is right, there is a gap in the market. Tesla's going after that gap. They're going to be filling in the gap. I don't really see anyone else credibly going after this market. They can't. They're not making money. They don't have price leadership. Their costs aren't low enough already. Tesla's basically going to have this market all to themselves for years to come. SVD. What is with these? Why do they do this? Obviously, this is supply versus demand. Can you just use words, guys? I mean, what is this? Maybe I'm just too dumb to understand. Incremental supply recovering relative to demand. Oh, by the way, I need to take a dump on Morgan Stanley because it wasn't long ago that these morons were claiming that there was an excess of supply of electric vehicles. Too much supply, not enough demand. This was never the case. Let's read on with that in mind. A recent price war in the Chinese market, led by Tesla and BYD, and joined by many others, has global implications for EV supply and demand. Anecdotal information from OEMs and suppliers suggests chip shortage is beginning to move into the rearview mirror. Falling lithium prices. Spot prices for China lithium carbonate have fallen sharply to just below $40,000 a tonne. We note that North Asia prices have held up better, falling to $70,000 a tonne. Latest data on China battery production still significantly exceeds installations. Let's check out that chart. This is the chart in question. China's monthly battery production and installations in gigawatt hours per month. Blue is produced, gold is installed, and the red, gap as a percent of installations. If you guys want to nerd it out and pause, feel free. Slowing market growth and lending. Recent events in the global banking world may drive tighter lending standards and may have an adverse impact on financial institutions' willingness to fund car purchases at the margin. Feeding the services flywheel. While margins on lower priced vehicles may be lower than what Tesla has achieved in recent years, there is a longer term payback on monetizing the installed base from recurring revenue, services, aftermarket, charging, software, etc. They're absolutely right. Again, I've been talking about this for a while. The way to think about Tesla really is their active install base. How many Teslas are on roads? Because Teslas on roads means Teslas that customers can be buying software from, upgrades over the air, almost pure profit, pure margin. The number of services and products and subscriptions that will be available in the future will continue to grow exponentially. Electric vehicles, these Teslas, are computers on wheels. Have you ever, in your entire life, paid for an application on your desktop computer or your mobile device? You have? Well, imagine that. The same will be true of people driving Tesla vehicles. We are just getting started. The software revenue floodgates are about to open. Bottom line, we are prepared for price cuts to be an established feature of the global EV market. As the supply and demand environment continues to change, we would prepare for potentially lower margins, gross automotive and operating margins, than consensus currently forecasts for Tesla. Personally, I don't find this likely. It's possible, but remember, Tesla is massively, and I mean massively, driving their cost to produce vehicles down over time. The trend is down. Significantly down, and they're just getting started. Believe it or not, Tesla can enormously cut prices on their vehicles while maintaining similar or even increasing margins from where they are today over the long term. My best guess, it's going to cost Tesla about $15,000 at the end of this decade to make a compelling electric vehicle. I don't think they're going to need to sell them for $15,000, and I suspect over the long term, Tesla will maintain 30+% gross automotive margins. Again, they'll be volatile and bumpy along the way, but I think likely that is the long-term trend. This could potentially drive more opportunistic entry points into the stock. At the same time, we believe Tesla's EV competition, startup and legacy players, will continue to struggle to catch up. No shit, Sherlock. Driving, restructuring, and consolidation. I love how they're unwilling to just say catastrophic bankruptcies. Restructuring and consolidation means lots of companies going bust, being acquired, merging, and turning to shit. Well, it looks like Moody's have finally taken me up on the offer to fix their f***ing brains by taking Athletic Greens AG1 every day like I do, and out of absolutely nowhere, this just happened. Moody's assigns Baa3 issuer rating to Tesla. Outlook stable. It is official. Tesla no longer rated as junk. However, Moody's absolutely, unquestionably junk. What have these idiots been doing for the last 3 years? Don't ask me, but clearly they have not been using their brains or thinking at all. These morons. I mean, you guys have seen the whole spiel, right? We've covered this before. If you're a regular viewer, you'll know what's going on. On just about every metric under the sun, Tesla was slaying it compared to other automotive manufacturers, using the term loosely there because there's a lot more to Tesla's business. Yet the dimwits at Moody's had just about every legacy automotive manufacturer as investment grade versus Tesla as junk. That's right. The companies who'll soon be extinct, these idiots suggesting had a better chance of surviving and a better... Just made no sense. We've been here, we've covered that. But finally, the day has come. Like I said, I think their brains are finally working. They're only about 3 years too late. It's just so embarrassing. Like, I'm just going to read the date on this just to really rub it in. 20th of March, 2023. Not 2020, 2023. Moody's assigned a Baa3 long-term issuer rating to Tesla and withdrew the Ba1 corporate family rating. the BA1 PD probability of default rating, as well as the SGL speculative grade liquidity rating. The outlook is stable. The rating action reflects Moody's expectation that Tesla will remain one of the foremost manufacturers of battery electric vehicles with an expanding global presence and very high profitability. Well, imagine that. The penny's just dropped. Moody's finally figured out that Tesla will remain in the leadership position and print a lot of money. I wish I had known this earlier. I probably would have bought Tesla stock hand over fist. But I'm glad Moody's has finally pointed out that they're in a leadership position and they're a money printer. Thanks, Moody's. I owe you one. The upgrade also incorporates governance considerations, including Tesla's prudent financial policy and management's operational track record. Ratings rationale. The Baa3 long-term issuer rating reflects Moody's view that Tesla will maintain its position as one of the leading manufacturers of battery electric vehicles as the company further solidifies its global footprint. Moody's anticipates that Tesla will deliver nearly 1.8 million vehicles in 2023, a 34% increase compared to the 1.3 million vehicles that it delivered in 2022, and nearly double the deliveries of 2021. Considerable investments in new vehicle and battery cell production facilities enable steep increases in vehicle deliveries. Jeez, I mean, they're preaching to the choir here. Tesla's product offering is expanding with early production of the Cybertruck slated for later this year. The development of a next-generation vehicle at a targeted 50% reduction in cost holds the prospect for a meaningful decrease in the reliance on earnings contributions of the Model 3 and Model Y. Tesla's growing scale, regional production facilities, and heightened focus on the efficiency of its manufacturing process support an EBITDA margin that Moody's expects to be 15.8% in 2023. The margin compression relative to an industry-leading 18.9% EBITDA margin last year reflects a drop in Tesla's vehicle prices amid a more competitive offering of battery electric vehicles by other automakers, changes in tax credits across geographies, and concerns about vehicle affordability. Moody's expects Tesla's financial policy to remain prudent. Tesla's financially bulletproof at this point in time. Like literally, an asteroid could hit every one of the gigafactories, destroy them, including the ones currently under construction, and Tesla would be fine. Now, it wouldn't be ideal, but they'd literally be fine. They would have enough cash to rebuild all their facilities today, ramp them up, not sell any vehicles for a couple of years until they're ramping up, and get back to business and be printing money again in no time at all. Moody's also noting that Tesla repaid about $10 billion of debt in the last 3 years. Other governance considerations and management's track record, near flawless, balancing business accomplishments against notable key man risk, and close ties between members of the board and the CEO. The stable outlook reflects Moody's expectation that Tesla will continue to capitalize on robust growth in demand for battery electric vehicles, but in an increasingly competitive environment. Further, Moody's anticipates Tesla will maintain an industry-leading EBIT margin in the next 12 months, albeit still largely reliant on only 2 models. As if this is a negative point, these idiots. It was not long ago, right, that these faces were rationalizing why Tesla was junk rated for because they had not enough product models. I mean, are you dumb? Seriously. I shouldn't need to explain this, especially to the geniuses at Moody's, but if a company's already slaying it with 2 category-killing products, a sedan and an SUV, and they are slaying it, best-selling vehicle by revenue in this market, best-selling vehicle by unit volume in this market, climbing up. Clearly, Model Y soon to be the best-selling vehicle on Earth by unit volume, then double, then triple, then probably quadruple. That's a bullish signal. The fact that they are able to sell so many of so few models shows how compelling their products are. The parts in common, the economies of scale. This is such a bullish signal, yet Moody's still clinging on to the idea that this is a negative for Tesla being reliant on only 2 models. Moody's anticipates that liquidity will remain very good, underpinned by a very sizable and growing balance of cash and investments, prospects for free cash flow of more than $7 billion, and limited debt maturities in the next 2 years. Factors that could lead to an upgrade or downgrade of the ratings. The rating could be upgraded if Tesla maintains a strong competitive global presence as other automakers offer an increasing number of battery electric models and successfully broaden its product offering, such that it reduces its reliance. Hell, dude. Oh my god, you idiots. They still don't get it. Imagine Moody's comments on Apple. We are deeply concerned because Apple is currently reliant on just 2 models of the iPhone, such that it reduces its reliance on the earnings contribution of the Model 3 and the Model Y. Tesla's ability to sustain an EBITDA margin in the high single digits and a longer track record of consistent, prudent financial policy are also important considerations for a higher rating. The rating could be downgraded if demand for Tesla models materially softens amid an expanding offering of battery electric vehicles by other automakers, or if Tesla is unable to sustain its EBITDA margin in the mid-single digits. A material shift in Tesla's financial policy that signals a greater tolerance for financial risk could also cause a ratings downgrade, including debt to EBITDA greater than 3 times, or if the amount of cash investments and committed revolver availability decreases considerably from current levels. And just one final glimpse at the 3rd page of this abomination. At least one ESG consideration was material to the credit rating actions announced and described above. What the f***? One more time. What the f*** does ESG have to do with Tesla's credit rating? Nothing. ESG needs to die. So, better late than never. And by late, I mean about 3 years late. These dipshits still haven't figured out that the legacy automotive industry, almost every single one of these companies, will be out of business before the decade ends. Don't you dare check their credit ratings on any legacy automotive manufacturers. I really don't have the words. Of every company on Earth, not just automotive manufacturers, on Earth, regardless of industry, Tesla is one of the most financially stable, investable on the planet. They still don't get it. Tesla's just been bumped from junk to investment grade, only just. At least it's progress. And just in case anyone's wondering, the SMR ratings agency currently has a junk-ass rating on everything Moody's ever says about anything ever. They have no credibility. This does not redeem them. They're 3 years late. It's embarrassing. They should just give the up. But they won't. You can bet your bottom dollar that I will be revisiting their current ratings for all of the legacy automotive manufacturers one by one as they go bankrupt later this decade. Something Moody's is clearly unable to see is inevitable. Another case of the so-called experts having literally no idea what the they are doing. So I guess the moral of the story today is better late than never. Obviously, Moody's are a few days into their Athletic Greens AG1 daily health habit, and now that they have enough energy to use their brains, they have used their brains, and they've realized that Tesla is one of the most financially stable, in fact, dare I say it, bulletproof companies on planet Earth. If this trend continues, Moody's continue to feel and perform better, their brains continue to work better, maybe, if we're lucky, it won't be too long before they start massively downgrading every legacy automotive manufacturer. I don't know if they have a red flag of the century rating, but they should. Because that's how every single legacy auto company should be rated at this point in time. I can't believe they still don't realize most of these companies are doomed. But credit where it's due, they are starting slowly to wake up, even if they're about 3 years too late. As you can see from these extremely legitimate testimonials that I definitely didn't make up. Quote, I work for Moody's. I started taking AG1 recently and decided to resign in disgrace. But before I did, I began spiking the water cooler with AG1. I think this may have caused a credit upgrade. Don't tell anyone. Okay, I promise I won't. And another one. Before AG1, my wife rated me as junk. After AG1, I can't keep her off my... that's highly inappropriate. We should definitely vet these testimonials. Dear editor, yeah, make sure you vet these next time. The only logical conclusion is that, oh, sorry, I have to go. Apparently someone needs to re-rate my junk. Again, it's a third time today. Duty calls. Not sure where to go from here. I think what I'm trying to say is you should take Athletic Greens AG1 every day and feel and perform your best. It's full of 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics, probiotics, digestive enzymes, and adaptogens to help you deal with stress. Obviously, some folks at Moody's have started taking AG1. Suddenly their brains are working, they've got enough energy to use their brains, and they've used their brains and discovered that Tesla is actually one of the most financially stable and resilient companies on Earth. Such a simple daily health habit, one scoop once a day, every day. It's that simple. If you head to athleticgreens.com/SMR or use the link in the pinned comment, you get a 1-year free supply of vitamin D3 and K2. And there's a pretty strong chance that in no time at all, you'll be upgrading your energy rating from junk, trash, lethargic, and tired all the time to goddamn it, I have so much energy, what am I going to do with it? It took Moody's over 3 years to see what was obvious to others regarding Tesla. 3 years late to the party. And it's getting close to 3 months since I began banging the drum on AG1 to try and help you guys and girls feel and perform your best. I take this stuff every day. I have been now for almost 2 years. I swear by it. That is why I'm so heavily promoting it. Head to athleticgreens.com/SMR or use the link in the pinned comment. Start your daily health habit now. There's a 90-day money-back guarantee, so if you don't begin feeling and performing better, no loss. But I think that's a pretty unlikely outcome. And lastly, if you'd like to unlock over 300 exclusive videos and counting, head over to Patreon with the card in the corner or the link in the pinned comment. I'll see you over there. Love ya.